Good afternoon, gentlemen. All members present here. Welcome to the discussion session of Anwar Ceramics for the financial period ending 30th June 2024. And I'm sure most of you would have already gone through our financials and already done a detailed analysis of all the numbers. And then you must have arrived at some queries which you will be having, and then which we can discuss as we go ahead. Okay, to start with, I don't have a presentation as usual because most of you would have already done the analysis. So just to give you a brief of our operating performance, we have. Can anybody confirm that you are audible? I'm audible, and then it's fine to go ahead.
Yes, sir. Yes, sir.
Okay, fine. Thank you. Thank you. So just to start with our operating performance, the first half of 2024 has not been a very good one. The revenue was down by about 16% over the first half of 2023. Having said that, but as compared to the second half of 2023, we are almost flat on our revenues. And coming to the operating profit, we are down over last year, same period, by about 86%, whereas we have done better than what we did in the second half of 2023, where we had reported a loss in the second half. That we have now converted into a profit of about a small profit of about 200,000 reals approximately. And investment income has also come down substantially because all our the structured projects and the investments had already matured by the end of last year and fully by the beginning of this year. So thereby our investment income has come down to about 210,000 as compared to about 1.147 million, which we had last year, same period. And also whatever maturity proceeds we had, we in fact closed all our loans. So today, if you see our balance sheet, we are a clean and a debt-free company. So that's where we stand on the investment income. So the pre-tax profit consequently has now gone down to about 400K, as compared to about 3.481 in the previous year. So, and profit after tax also has come down by about 89%. But having said all these things, I just would like to give you a brief about as to why we had this kind of a situation. The operating environment continues to be very difficult for the industry as such. It's not only for Anwar. If you compare with any of the other companies listed and unlisted in the region, the operating environment is very difficult and challenging for the industry. And the main reason for that is the very cheap imports of tiles from India, which is impacting the realization, and also the overall market demand, which has now considerably come down due to various reasons. Basically, the geopolitical situation in the region, where one side there has been some the war going on, and then there has been a lot of disturbances in the movement of materials also, especially in the Red Sea. That has also contributed quite a bit into the dip in the demand and the movement also. So, and also second quarter was also affected by both the Eid holidays, Ramadan, Eid, Hajj, everything all put together, which affects considerably the regional demand for all the materials. So that also impacted to some extent on our performance. And as I said, the geopolitical situation has also contributed to it. Added to that is KSA, as also the Saudi market has got some very big manufacturers, Chinese manufacturers who have come in. So their huge capacities and their pricing has also impacted our volumes as well as our realizations to some extent. And also the duty which has been imposed by KSA, though the refunds have been trickling in, but still it is still an impediment for us to go full throttle in that market. And with all these things, our realization also is down by about 8 to 9%, as you have already seen. And tile imports from India is also is growing basically because there has been an anti-dumping imposition by EU also on Indian products, and also KSA has also imposed it, and also US also is in the verge of imposing the anti-dumping on Indian products. So that leaves the Indian manufacturers to dump it in our market at very, very low price. We have been representing to our government also to implement the anti-dumping, and which they have said that they will positively look at. But we need to wait and see what the outcome of that is. Okay, and Saudi market, we don't know whether it will be the same as attractive as it was in the past. And to overcome these challenges, uh, we as a company also have put in a lot of efforts, and then some plans in place, like we have been rationalizing on all our fixed costs to see that how we can be more competitive in terms of offering the prices to the market, so that we can, though at a lower realization, if we are able to rationalize and optimize on our fixed costs, we will be able to improve our bottom line. So that that effort has given us some results. You would have seen that the fixed cost has come down by almost 15% in our financials. That is one. And then more importantly, we are also diversifying, not diversifying, I would say that we are looking at product introductions. Like in the last 2-3 months, we have been doing a lot of research, and then we have successfully introduced a cool tile, a roof tile with a SRI index of 115 and things like that. And also we have successfully introduced now the very large format 60 by 120 size tile very successfully. We have launched it recently. And also we are looking at a little bigger high thickness tile. In our high thickness tile, which we had was the biggest was 50-50. Now we have introduced a 60 by 60 high thickness tile for outdoor usage. So that is also, we are just waiting to see how it is going to, how the market is going to respond on that. So we are taking all the initiatives, and then we are proactively working towards seeing how we can recover. The one is the market, and one is on the realization front. On both fronts, we need to see how we to be back on track, or back to the levels which we had seen in the past. And also we are looking at market also. Market penetration is also very important because of the geopolitical situation now. We are the exports, for example, to Jordan and all is very, very challenging now. And also Yemen also, there has been quite a import of cheap tiles from Saudi into Yemen market. So we are looking at consolidating a few other markets, and then we are working towards that. So with this brief comments, I will leave the floor open to the for any questions that anybody has. Gentlemen?
Hello.
Hello. Hi, Bishan. Think you have a...
Hi.
Yeah.
Yes. Good afternoon,
afternoon.
Mr. Suresh. This is Bishan Bhala from Vision Capital. Thank you for the call and for the brief sort of overview of how things stand.
Sure.
And
Thank
sort
you.
of, you mentioned about how things have been challenging, and you've been transparent in the reasons for the same.
Yeah.
And if I look at, and you did mention this in the last call as well, that Q2 was a peculiar quarter for the Eids falling, restriction
Yeah.
in movement. You've
Yeah.
seen some challenges across on the freight side also, where the prices have increased, but the availability was a problem, and that's eased now.
That's right.
Going forward, sort of what in this challenging scenario, you mentioned all these factors.
Yeah.
How do you see Q3 and Q4 panning out? Because I would like to believe the worst is behind us in terms of operating performance in Q2. Or do you think that's just where the industry is right now?
Bishan, I wouldn't say that we are behind the entire challenges. The challenges still continue. There is an overall dip in the demand also in the entire region due to the geopolitical situation here. There is a liquidity crisis in some of the markets. So all those challenges are still there. But we are trying to overcome those challenges with the new product introduction so that we can offer something different than what is there in the market, especially by the manufacturers in the country and in the region. That is what we are trying to do to see how to and overcome the situation. And but the challenges continue. Uh, so the what do you call uh, the the situation can improve if the Oman government is able to, impose the anti-dumping and, and make a little more facilitation in terms of bringing in some quality standards like what Saudi has got as ASO certification or a quality mark and those kind of things. So, but so far with the introduction of the new products which we have done, the response seems to be pretty encouraging. So we will need to wait and see as to how it will pan out. But for sure, the time of the Eid and other things of the second quarter is behind us, but the challenges still continue to be in front of us.
I was actually referring to utilization more than the operating environment. I understand that's challenging and it will probably remain that way. I was
Yeah,
referring to the utilization because you mentioned, Q2 was peculiar because of both Eid holidays falling in the same quarter, one from the
that's right.
previous quarter and one during the quarter. So we saw utilization down to 70% from 80% the first quarter, along with the price drop.
That's right.
So, so on those two fronts, utilization and prices, uh, what is your sort of outlook for Q3 and Q4? Because generally the company as a strategy has known to achieve a high utilization, wherein your strategy is that there will be challenging times, but as long as you can maintain a high utilization, at least you are ensuring that there's operating turnover, right? So if
Yeah.
you could just comment on utilization and prices, price realization
Okay.
for Q3 and Q4.
Okay. See, coming to the first part of your question on the utilization, we are not sure because when the overall demand itself is a little, what do you call, challenging. So I don't know how far we will be able to, push on the utilization front and then, go on the volume front. Whereas to counter that, we are now introducing new products where the realization can improve. So we were trying to set off the what do you call the volumes with realization. That is the strategy which we have adopted, and then hope we will be successful on that. Hope that answers
And
your question. Yeah.
sure, okay. So just to because this is for our purposes for analysis. So you think utilization will remain in the 70 to 80% range? Is that more realistic?
That is we are working on that basis only now. Yes, and improve our
Un-
realization so that once the market improves, we are ready to push up our
Understood. And the realization will drop 8 to
capacities.
9%. The newer
Yeah,
products can offset that sort of margin
to
because
to
they're
some
better
extent.
margin products.
Yes, to some extent. That's right.
Right.
That's right. That's right.
And effectively, the key to your utilization going up is the Saudi market eventually. I mean, Yemen and Jordan, you mentioned geopolitical tensions, but even
Yeah.
if they were to go away, Saudi would still remain the main market for you. So effectively, the setting up of Chinese players in Saudi, the
Yeah.
local expansion over there, and the slowdown in market are all factors that have contributed towards challenging sort of environment for Anwar Ceramic, right?
That's right. That's right. I would say that. But having said that, Jordan, of course, is still challenging because of the movement into the Red Sea. Whereas Yemen, as it is going by road, still we are holding on to our volumes. And then, though there is pressure on the realizations, but we are still holding on to our volumes there. So there we will have to see how we can further, consolidate.
Understood. And like you said, the
Yeah.
other key for your local markets. What percentage of your sales are the local markets currently?
I would say it is in the range of around 50%.
50%, right, right.
That's right.
And there till there's some government intervention or some imposition, that
Yeah,
also remains challenging because your margins are driven down because of competition or rather dumping from
that's right.
regional players and mainly from India. Or is it
Mainly
also
from
from
India.
regional players? Mainly from India.
No, regional
Right.
players don't play a major role because they are all sailing in the same boat like us. So it
Right.
is basically because they are also facing the same challenge of dumping from the Indian manufacturers.
Right. So in the absence of any sort of imposition of anti-dumping like we had witnessed, in 2019-20,
Yeah.
even if things pick up in Saudi, as and when they do pick up in Saudi, you already have other counterbalancing factors such as higher sort of supply over there, as well as presence of regional players and lack of imposition of anti-dumping duty.
Yeah, see, there then the strategy will be totally different. See, we will adopt a different strategy there because if the anti-dumping comes in Oman, we have a leverage in terms of our pricing capacity here, which we can leverage. Even we need to lower our realizations in other markets and then go on full capacity throttle. We can do that. So I mean, imposition of anti-dumping in Oman will be pretty crucial for us to strategize even in the other markets.
Right. And on the investment book side, if I may touch upon that, you don't
Yeah,
see effectively that is done with for the time being. There's no
that's right.
fresh investment there. So you're effectively a debt-free company,
Yeah.
but there are operational challenges, and for now there's no insight on the investment book.
No, investment book, we continue to hold the other things. Only the structured products and the notes which we had, which matured, we didn't reinvest, which we
Right.
foreclose our term loan. Whereas the other investment continues to be there, which is much smaller. I mean, if you see our
2 million.
balance sheet, about 2
I think
million,
that's enough.
that still
Right.
continues there. Yes, that continues.
Okay. And if you may, if you could just explain the nature of these other investments.
These are all in, some of them are in equities and then some in rates
Okay.
across the region, actually across Asia. Some of them in Singapore and some there is an investment which in our annual report we have
Annual
reported.
report.
Yeah,
Right.
yeah,
Right.
it's
Yeah, I was having a
reported
look at
there.
that. Quoted for yeah. And Iraq is Iraq Asia Cell?
Asia Cell, that's right. That's right.
Right. The telecom company.
It's a
How's
telecom
that?
company. Yeah, it's paying us a decent dividend year after year. Almost
Right.
100% dividend is what they have been giving for the last few years. So to that
Right.
extent, it is the yield has been pretty decent there.
Yeah, because I think you're at what? You're probably at 40% of value for the investment to cost. Because I remember tracking this a few years ago. Asia Cell, you and Jazeera Services both have this. I
That's
think the
right.
cost was 1.9 million and the market value is 800,000.
That's
If I'm
right.
not mistaken. Right.
That's right. That's right.
And there's
then
no
it's
exit strategy for this investment to redeploy it somewhere else. In terms of
no,
this, in terms of return, you
yeah,
mentioned they pay out 100% dividend. But
yeah.
in terms of price performance and in terms of dividend yield, what return profile does Asia Cell have?
It is yield wise on what we are holding. Yield wise, it will be anywhere between about 10 to 12%.
Yield of, okay, wow. So on a
Yeah.
1.9 million, that's on 1.9 million or on market value?
Or on the market value, I'm saying. On the market
Right.
value,
So 10 to
yes.
12% effectively becomes 40%. So on approximately 4.5% yield.
4.5%. That's right. Yes.
Okay.
4.5, 5% is it's a decent deal. Plus, what has happened is we have also grown in terms of there have been some rights, I mean bonus issues which they had given. So that has
Understood.
actually converted our holding much at a lesser value actually. Yes.
Got it. All right.
Yeah.
That's it from my side for now. Thank you and wish you all the best.
Thank you, Bishan. Thank you. Yeah.
Yes, hi. Good afternoon, Mr. Suresh.
Good
Thank you for your
afternoon.
comments. Yes.
Yeah.
So my question is, could you expand a bit more on Saudi? Your initial comments say that, Saudi market, you're not sure if it is as attractive as it was in the past. So I understand there are big Chinese manufacturers with huge capacity. So how are you thinking about the region? And, has your internal forecast for demand from there, reduced? I mean, what you can serve. So could you just, expand a bit more on the Saudi as a potential growth option?
See, our strategy now is to hold on to whatever volumes we were doing in Saudi and not looking at any in the medium term. In the short to medium term, we are not looking at any growth there as such. First is we want to recover to the position where we were. That is the challenge that is in front of us now. So once we achieve that, then we will see how the growth potential is going to be there. See what has happened in Saudi, just to give a little more insight into the Saudi situation. See, one is the geopolitical situation. The other is Saudi now has in fact demolished completely, say, two cities, not completely, I would say about 30-40% of this of two major cities, Jeddah and Riyadh. And then they have said that they are going to reconstruct it in a very big way. Okay, so for that, there is we are just waiting for that to start, or all the manufacturers are waiting for that across the building material industry, not necessarily the tiles or in our industry as such. So we what has happened is, because there used to be a lot of replacement demand in that region, that also has come down. So the replacement demand is there now, has come down, and the new demand also has not still started. So once the new demand starts there, then probably all the players will have an advantage, and then we will have ample demand to supply there. So it's only a matter of time when they are going to give the permissions for the reconstruction to start.
All right, understood. Thank you so much.
Yeah. Yes, gentlemen. Anybody else?
Hi, good afternoon, Mr. Suresh.
Good afternoon, Yaqub. How are you?
Alhamdulillah, everything is good. Thank you for the brief introduction, and I can see that the initiatives implemented in Saudi Arabia aiming to establish control and efficiency. However, like you haven't mentioned, what's your strategy for operating within Oman? Specifically, would you consider pursuing a direct contract with Sultan Haytham area?
Yes, Sultan Haytham area, the Sultan Haytham city also is a big project that has been announced in the Sultanate now, and we are already in touch with a couple of developers there, and then we will see how much we can participate in that. I mean, we will leave no stone unturned, to see that we participate in those projects for sure. Okay, but the challenge is on the realization in the market, as I already explained.
Yeah, we'll clear. Thank you, Mr. Sheikh.
Yeah. Okay. Yeah. Jasim? Yeah, please go ahead. I think you are still muted. Yeah.
Yeah, Assalamu alaikum, Mr. Suresh. It is a pleasure to be as a local Omani investor, whatever analyst, young Omani, to join you in these meetings.
I appreciate that. Welcome, Jasim, and then I appreciate the young Omani, doing some analysis. We are very happy. Yes. Yeah.
I've been with the shareholder. I mean, I've been there at the meeting previously with I think the previous chief. You were there.
Okay.
I mean, the financial probably in charge. However, okay. I mean, industry of ceramic is very important industry. I've just seen you're now in front of me, because I'm not, as I said, just seen it your figures right now. Your PL account for the last 3 months, your revenue has dropped sharply. I mean, previous 3 months was better. Overall, for 6 months, probably affected. The cost of the material, I mean, is it the pricing is becoming low, or what exactly?
It is, as I explained to you earlier, the pricing is what is really affecting us. Yes, the realizations have considerably come down. We have a drop of almost 9% in our realizations, as I briefed in the beginning. So that is clearly a challenge which we are having now. So what was your observation that the prices have come down is perfectly, you have hit the bullseye there.
Yeah, I just joined now, but that's why I asked you. Sorry to what's it called.
Yeah.
But how do you see that? I mean, since I remember a long time that you are most of the most of the probably project is being for export, which is, I remember a long time, it was 80% of the productions normally to mostly to the Saudi Arabia, what you call it, market. I mean, how do you see it? I mean, from your point of view, you are an experienced guy in this business. I mean, currently and in future for the business of the ceramic industry, if you can tell us a little bit about it.
You wanted it specifically in terms of Oman, right?
Yes, and
also in the region, yeah. Okay, fine. I think, yeah. Okay, fine. Okay, I will just briefly, repeat what I had told just a few moments before. See, Oman is still holding on to the volumes. I mean, there is the demand in Oman is still holding on, but the realization is what is affected here because of very, very cheap imports from India, dumping of very cheap tiles from India, which is affecting all the manufacturers here on their realization. So that challenge is what is in front of us, for which we are now, in discussions with, as all the companies together, we are in discussion with the government to, request them to impose or implement the anti-dumping again. Okay, like what Saudi has done, and also to ensure that the consumers here get a very decent product, a fair product, a quality product. We are now requesting them to even introduce a quality standard like what Saudi Arabia has introduced as SAOG standard. Like that, we want to introduce a Oman standard so that what products come in is not very cheap. And then if a good quality product has to come in, it cannot be cheap. So both ways, the consumer will be protected. So we are working towards that also. So we will see how much time it will take and where it leads us to. And coming to the Saudi Arabia, I had just now briefed saying that there are challenging times, the geopolitical situation there, because of which there is a overall dip in the demand in the market itself. So that is, we are just holding on and then just watching to see how the situation is going to improve and then how we can, go back to the levels which we were operating there.
Thank you, Suresh, for your answer.
Yeah.
Wish you the best.
Thank you. Thank you, Jasim. Yeah. Anybody else? Any other questions? Or maybe we can wait for a couple of minutes and then maybe we can wind up the meeting if there are no further questions.
Sorry, Jasim again. Can I talk about the human resources? I mean, if you can tell us, I mean, what is your, as I said, I didn't go deeply in your what you call just to see it. What is your number of staff on the full strength of the staff? I mean, of the factory or the company itself, if you have this figure.
We have around approximately we have a total number of about 375 staff.
Okay. Out of them, Omanis, how many? 40%?
Yeah, Omanis are about 40%, and we have Omanis across all categories, right from senior manager up to the operator level. We have Omanis doing extremely well. We are quite, we are one of the fortunate companies to really boast saying that we have very, very good Omanis in our portfolio, in our company. Not only that, and also very efficient, and a lot of them have grown internally from from the lowest level to the managerial level. They have grown extremely well, and then we are pretty confident that we can do more in the coming years on that.
Nice to hear this from you. I hope, inshallah, to have at least 10 young graduate Omanis to join the company every year, inshallah, and they can be groomed to the higher position.
Sure. Yeah, that has been one of our highlight, which we have been doing it right from the beginning. We always take Omanis at the levels, and then we ensure that they are groomed to take higher responsibilities. Yeah.
I hope, inshallah, especially in marketing and finance, we need to see this.
Yes, we already have our marketing team. 80% is Omanis.
That's good to hear that. Thank you, Suresh, again.
All right. Okay. Okay. Okay, gentlemen, I think there is no other questions. So maybe we can, no, Mr. Jasim, you want to have one more? No. Okay. I thought because there was a hand up. Fine. Okay. Thank you, gentlemen. Thank you for being present in the discussion session, and then hope this session was informative, and wish you all the best.